Back to EG Financials. Today we're taking a look at one of my favorite weekly videos where we recap and take a look at the stock market performance, mortgage rates, and the probability of the Fed rate increases. So let's get started. Here we're looking at the performance by sectors, and we have different time frames. We'll start off by looking at the 1 week performance sorted in descending order. And we can see that for the past week, utilities and consumer staples have been on top, while energy and communications are at the bottom. Next, let's take a look at the 3 month performance. Information technology has gained 20% in the past 3 months, communication services 14.7%, and consumer discretionary 14.6%. And at the bottom, we have energy, which has lost about 3% in 3 months, and utilities at 1.5% gain in 3 months. Let's scroll over to look at a longer time frame. We'll look at 1 year and 5 year. Starting off with 1 year performance, information technology and consumer discretionary are at the top, including industrials. They're all above 20%, with information technology above 40% gain in 1 year. And at the bottom, we have real estate, which has lost 4.3% in the past year, and energy at 1.78% increase in the past year. Next, let's sort the 5 year period. So information technology has gained 140% in the past 5 years, healthcare 55%, and let's look at the low performing sectors, which include energy 8.2% and real estate 19% over the last 5 years. Next, we have mortgage rates. This is for the 30-year fixed mortgage, and here we're looking at a 1 year view. And we're currently close to 7% at 6.94 as of June 15th, 2023. And we can see that we're getting pretty close to this peak that we had back in March of 2023. And the previous high was at 7.37%, which was October 2022. And if we zoom out to take a look at a 5 year period, jump in mortgage rates is a lot more apparent. And if we go even further out, we can see that we were in this downward trend starting back in 1981 when rates were at 18.45%, and we've been decreasing, and dropped. During COVID, got down to about 2.5% for many people that were getting new mortgages. The last year or so, we've been increasing, and this is where we're at now, 6.9%. And lastly, let's take a look at the FedWatch tool to see the probabilities of whether the Federal Reserve's increasing rates, keeping them constant, or decreasing rates. So here we can see that the current target is between 500 and 525 basis points, and there's a 72% chance that the Federal Reserve increases rates by 25 basis points, and a 28% chance that they keep rates unchanged. Let's take a quick peek at the December probabilities to see if the market's pricing in a rate cut. So looking at the probabilities for the December meeting, the rates between 525 and 550 has the highest probability at 45.2%. And that's it for today. Make sure to follow for more updates. Thank you.